Hi everyone, today we finally got some cracks in the armor here. You can see we went higher, we hit that level, overthrew it pretty dramatically. 604.54 was the target, overthrew that, got a high all the way up at 606.37, and then we pulled back right to the level, chopped at it, and then broke down below some of the structure here. It's not completely broken yet, but the momentum bearish, RSI bearish, volume coming in at the end of the session was a little bit bearish. Now we've seen this before, but this was kind of outsized coming off of a light CPI read. Markets really liked that initially, and then we faded off of that. Not exactly what you would want to see. So far, every time we've seen this, like here on NVIDIA, we retraced for a little bit and then went higher, retraced for a little bit and then went higher. So not completely out of the bullish rally here yet, but definitely some cracks to watch for. So let's take a quick look at all of the charts in the data and see if it makes sense to look bullish or bearish. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. In news today, we got Besant coming out and saying kind of what we thought was going to happen yesterday. We talked about this. If they continue to have good discussions and we come up on that 90-day pause deadline, they're just going to go ahead and extend it as long as they are having good trade talks. Basically, this is the big stick, and they are using it to have that kind of negotiation. So at this point, it seems unlikely that the tariffs are going to go back on. It seems like they're just being held in reserve in case a country kind of breaks off the way that China did initially. But now the discussions seem to be good. They talked about rare earth metals today, and that was part of the deal, and everyone seems to be saying that the China deal is getting close to being done. Is it actually going to happen? That'll be interesting. Markets seem to have priced it in. They've rallied a lot. They did not seem to care at all about the news today about good tariff talks. Maybe we see a spike with a finalized deal, but at this point, it just seems to me like we're going to go back to the pre-tariff talk price action. I don't think this is really going to push us past that level. But just to reiterate, Besant came out and said if someone is negotiating, they will not put the tariffs back on. They will just continue to pause while the talks are going on, either until they break off or there is a deal completed. Moving over to fear and greed, here we did finish at a 62 from a 63 yesterday. Very, very little change, no movement here on momentum. Strength has been flat for basically a month at this point. And then looking at breadth, continues to improve a little bit. That's interesting. Extreme greed, very, very high levels on breadth. Put call ratio, big move down over the last couple days. Does this give markets a little bit of room to fall? I think that is certainly a possibility. VIX continues to flatline here, a little bit of a step up. We'll look at it on the charts later. Safe haven demand continues to crater here, and then junk bonds moving into neutral, continues to rally. A little bit of a widening spread there, something to keep an eye on. Moving over to the economic calendar, you can see that really soft inflation read that we talked about. I thought maybe we would come in line, maybe slightly hot, because the expectation was that we were going to move up here a little bit, and then we came in line with the previous read. And the month-over-month number was even softer than the previous read. Headline number, slight step up there. Again, month over month, slightly lower than the previous. So a little bit soft, nothing crazy. 10-year bond auction, a little bit higher percentage than the previous. Federal budget continues to spend money like crazy. Big deficit there. And then for tomorrow, we get the PPI. Continuing jobless claims, not a whole lot out of that. 30-year bond auction, that might creep closer to 5%. That would be interesting. And then we get the Michigan data here to close out the week. Not a whole lot more this week that should move around markets. And then moving over to the charts, you can see we went right to that level, hit the target like we expected, 604.54, and then rejected cleanly from that level down 0.25%, a little bit more after hours, right to this trend line here. And then the next level would be that 597.63 level, 9 EMA sitting there, 596.71. So a couple of levels in here. If this breaks, then the next zone really is down here around this 578, 579 area, a bunch of consolidation. EMAs and trend lines in this zone to watch for. So you kind of got right here, needs to hold here if it's going to do it. Otherwise, we're probably going to there. And then looking at the hourly chart, like I talked about, big rejection, continues to sell here in the after hours, momentum bearish, RSI bearish. Probably going to go to that next level, 597.63, the trend line in here, just below it, 597 flat or so. And then the next level would be that 144 EMA, 596.19. So again, you got some support in this area. You can see it in that same zone that we talked about. Makes sense that we would come here. And then the question is, what happens? Do we get a bounce into a lower high, maybe a double top, get a little bit more of a topping pattern? This single touch and rejection is not a topping pattern. This could just be a high, get a higher low setup, just like we had here off of the previous low, and then you get a continuation on the trend. It's still absolutely a possibility, but for now it does look a little bit bearish. Moving over to the Tasty charts here, you can see we did pull back almost to that trailing stop. We did touch it on that first wick down. The trailing stop right now 599.36, which was pretty much in line with the low there from the 1300 candle. Continues to sell towards that level, and then you got the 89 EMA in there as well, 599.16 on the hourly chart. Just to look at that 4-hour chart briefly, you can see the middle of the range is where we're headed, 599.43. If that structure breaks 597, pretty much in line with that next level we talked about on the hourly chart. Nice confluence there. And then the trailing stop right now, 594.84. Moving over to the NASDAQ, it did not go to that next level, 538. You can see we missed it there. Got really, really close. The high of day was 537.53, so missed it by about 75 cents, pretty close. But then we just started to give it all back here, turning negative on the day, down over a third in the after hours. You can see we're continuing to sell off. About another $1.40 there, continuing to sell towards this trend. 529.62, momentum bearish, RSI bearish. And then looking at the momentum, you can see slight resumption to bearish momentum. RSI was overbought, continuing to sell off there. 523.24 is the next horizontal support. You can see that has nice confluence there with the 21 EMA, as well as VWAP in here. So 523, 524 seems like the zone to look for, but it looks like it's going to sell here more in the after hours. 9 EMA is still going to be support there, 527.82 here on the daily chart. So either way, looks like a pullback. And then don't forget, just like we talked about on the SPY charts, this is not a topping pattern yet. Do we see a bounce, double top, lower high setup, some kind of structure that says this is truly a reversal, or is this just a slight pullback and a continuation style move? Moving over to the Russell and the Dow, same thesis here. Both of these giving back just a little bit of the gains and falling in the after hours. The Russell did go to that 200 SMA 215.89. The high of day was 215.93. So we touched it, touched the trend line there, and then rejected. Bearish engulfing candle, momentum stepping back to bearish, RSI pulling back. It was obviously very extended over the last 4 days, lots of gaps left. It seems like we're going to start to pull back here a little bit more. Support for me to 1188, and then looking at the Dow, doji candle, but falling after hours. Support is still going to be that 426.20 level. And then looking at the momentum, didn't step down on momentum, still bullish momentum. RSI, really no changes there. Not overbought, but still above the SMA. So technically this is still bullish, but realistically it's going to go with the rest of markets. Moving over to the Mag 7, down almost 1%, 0.75% there after hours, down a little bit more, pulling back to that 315.04 level. Momentum back to bearish, RSI back to bearish. Everything's showing reversal style moves. Still seeing big divergence with that higher price and lower RSI reads. So again, still looks like a rising wedge, still looks like this is going to reverse. Is this the time? We're not quite sure yet. Moving over to the SPY divided by the M2 money supply. This is something that I noticed here as I was going through my charts. I decided to put the SPY chart on here just so you can see it. The SPY chart is the line, and you can see it's obviously very correlated. This is the SPX divided by the M2, so it should be very correlated. And pretty consistently here as we were going down, SPY was going down with this chart. Saw a little bit of divergence here, which to me meant we were going to see that continuation down. And then the SPY was leading us higher. This chart was leading us higher, but notice here at the current SPY chart, much, much higher relative to where it was back here versus this chart still sitting down here at this level. So it changed to percentages when I added the SPY chart, but really what I want to show is the levels. You can see this, it's in line with this consolidation up here. Right now the SPX divided by M2 is below this consolidation and well below the SPY charts. You can see just how correlated it was in here, perfectly correlated through here, but now there is a gap, and to me that says this is going to sell off, and eventually the SPY chart is going to catch up with it, and then we'll be back to correlation just like we were in here. You can see SPY chart, just a little bit of separation. Eventually it did come back into line, and that is what I'm looking for. Moving over to Apple and Microsoft. Apple was terrible as we expected. Nice rejection off of that consolidation area. Continues to break here. Broke back below 199.54. Going to go to 193.96 at least. I think it'll probably break through there on this iteration, but we'll see. And then Microsoft doesn't care about anything, just continues to go up every single day seemingly. Up 0.33%. Pretty much in line with the close back here from the Monday session, but the wick is a new all-time high. After hours, it's continuing to drift higher. Does not care at all about anything, just goes higher. seemingly every day since earnings. Momentum bearish, RSI super overbought, doesn't matter. Moving over to Alphabet and Amazon, you can see both of these giving back a lot of gains today. Amazon down 2%, right back to the level 212.25, fully engulfed the two previous days. Big moves there, momentum back to bearish, RSI selling off from overbought conditions. And then you can see Alphabet hit that trend, overthrew it, hit that level 179.42. Is this going to pull back into this range here? Let's go ahead and extend out some of these trends to give us an idea of where we could be headed. If this pulls back, you would have some trend support in this kind of 167 to 170 area. A lot of confluence in there. Otherwise, below that, you got 161.59. Moving over to staples and discretionaries, you got staples selling off, discretionary selling off, really nothing there. Momentum bearish, RSI bearish, not a whole lot of anything. Discretionaries was down almost 1%, a pretty big sell. You can see outside reversal day, that's interesting, where you gap up, try to go higher, and then end up bearish on the day. That is usually not a good indicator of strength. And then you can see the RSI test, like I talked about. This was trending lower, got the test, tried to get above it, and then rejected. Also not a good indicator of bullish pricing, but right now we're still above the EMAs. We're right below the level 215. Kind of mixed signals, but I would probably lean bearish at the top of this range. Moving over to the dollar, we've kind of been passing over the dollar because it hasn't done much over the last couple days, but look at the sell here today. Broke below these lows on this push candle to open. Didn't like that CPI read, which makes sense. We're probably going to get rate cuts based on it, maybe a little sooner than we previously thought, which obviously is bad for the dollar. But then we got markets going down and the dollar going down, which is a bit ominous, and you can see the gap down already here for that next session. So dollar selling off, you can see we're already oversold there on the hourly chart. Plenty of room here on the daily chart. It's been a long consolidation, but this looks like a fake out, and it looks like we're going to sell. Not what you want to see, especially when equities and the dollar are moving together. Moving over to JNK and TLT, you can see JNK hit the level like we expected it to. That was the 96.01 level, overthrew it, pulled back a little bit. Momentum flat, RSI flat, really no movement here. Your opportunity to buy was clearly in here when we started to waterfall off. And then looking at TLT, nice move up, about 1/3% back above the level there. Like to see it still holding this structure as support. Momentum bullish, RSI bullish. I think I'm going to buy some more bonds in here tomorrow. Moving over to the VIX. The VIX kind of did what we thought that it might. It threw a wick to that low and then caught a bounce. Didn't quite touch the trend line. Maybe my trend line is off a little. You can see nice touches here, nice touches here. It seems like I had it in a good spot, but for now, just barely missed it. Caught a bounce. You could argue it's a touch. Momentum bullish, RSI showing some signs of life here. Is this going to accelerate higher? Definitely something that seems possible here in the short term. Moving over to my accounts, I made money on the day, which is nice, especially on days where the markets were down. So I took profits on that put that I had as I saw markets start to sell off, and I saw profits on that put. I took those profits, and then the Russell sold off, so that was fine. I think I would have been fine. I think it closed above 213, but either way, put myself in a good position, didn't have to sit through it. And then on the Qs, took those off for a little bit of a loss. You can see this was a $400 gain on the calls, but then I was only about $200 on the day. So I did lose a little bit of money on the shares, which is a bit of a bummer. Should have taken profits on those as well, like I did on the puts, but I didn't. Either way, didn't lose too much there, and then made money on the calls, and I did roll out, which was not exactly what I wanted to do. I probably would have made more money if I did not do that, but you can see it here. I rolled for a very small debit, kept most of it, $29.72 credit for a 514 call here out to July. So lots and lots of money on that call, deep in the money. If we do start to see that sell accelerate, I'll be in a very good position here over the next couple weeks. And you can see we're selling off after hours, obviously good for me. And I do think we'll move lower. Even if we get a topping pattern and we start to see a little bit of a re-acceleration to the upside, I think we'll get that final topping pattern, and then we'll see a bigger pullback to some of those intermediate levels. And if those go, we could absolutely pull back even more dramatically. I just don't see a ton of catalysts to continue to push us higher from these prices. Let me know down in the comment section what you think of the trade deals and the influence of the CPI read today. Was that a rug pull? Do the markets care about inflation at all? Let me know. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.